Welcome to their Macro Monday or prepping for Macro Monday. So, we're going to cover futures right now because that is open, and then we'll get more into the dollar, how we responded last week, and then over to oil, crypto, stocks, and then we'll go into the trade idea that I am watching this week. So, first off, ES is going up about a 0.5% over the weekend today. Now we don't have any wick to the downside. This doesn't mean anything for any bullishness. I still expect downside movements. We have zero wick. I do expect to fade this now. Of course, we are extended from Friday's dump. These are moving averages. We are pretty far from it. You can kind of see this gap that we have here from price and moving average. So we are getting a little bit further away from the mean. Now, does that mean we can go and hit that moving average Monday or even Tuesday? Is possible. Not saying we will, but if you're looking for shorts, definitely right now is kind of late. So you would want to try to reach a moving average retest or rejection before we look for any more downside. But overall, I do expect more downside for the market, right? So right now, market is slightly up and after hours, but if we go to QQQ, we did actually close last week for a rejection, nasty moving average rejection, and the moving average had a death cross. Now we still have one more sitting at 570 for QQQ, but we have still a long ways to go before then. So as of right now, this is not looking good for the market now. If we do want to see a little bit higher for Monday, just for a pop higher, we could go up and retest this trend line again, just to fade to at least test its moving average, but probably a lot lower. Minimum target would be 557, which I'll go ahead and make that. I don't have it saved, so let me just do this. So that would be our minimum target for QQ is 557. Now, I think we can probably push down to 504, which is pretty deep, but I think we can get there. So that is QQQ. I still do expect more downside. Now, is there any case for QQQ that this makes a false breakout and we are still bullish? Okay. It may not look like that because we didn't make a false break on the weekly. We did on a daily, but the daily doesn't really matter since this is a weekly chart. This is a weekly wedge, so we're focused on the weekly. Daily doesn't really matter. So weekly, no false breakouts. Is actually not good. Now, this still has not had a displacement, okay? It has broken below, it has retested and rejected, okay? But it has not had a displacement. And when we go over and look at NVIDIA hasn't technically broken out yet. It closed at the trend line. If you go to daily, it closed at the trend line. Now, yes, I can absolutely manipulate this trend line to make it look like we broke, right? I mean, yes, that does look right. We broke, we retested it, or it can look like something like this, right? A break, and now we are retesting it for a rejection. That is completely valid. However, I don't like manipulating my wedges or trend lines. I like to keep it how I had it. So that may be correct, and we may actually be retesting that break at level 4 NVIDIA right now to push lower. Just to be on the safe side, I'm going ahead and say that we are at the trend line right now. We have not to close below it, just to be safe, because if we really are bearish, then it doesn't really matter. We're going to dump off this anyways. So this is just a way to make sure you're not changing your chart to fit your bias, if that makes sense. So overall, NVIDIA hasn't had a displacement below. We haven't even really, it's definitely not bullish. Don't get me wrong. This is not bullish. This is 100% bearish. But there is still a false breakout on the board. So NVIDIA still needs to break lower, right? So overall, QQQ is bearish, but if the market decides to absolutely rip Monday open, then we'll see what that means for the market when it comes. But the upside is not out of play. The upside is still definitely in play, just as much as the downside. I still definitely lean more downside for sure, but this is just something to absolutely keep into mind that if we do see upside and we do end up gapping back into this wedge, that NVIDIA hasn't actually fully closed below. So just keep that in mind. And now SPY, SPY is basically saying the same thing, except there's no bullish case for SPY. I mean, obviously, if QQQ is bullish, SPY is going to go higher, but SPY, absolutely nasty rejection to these moving averages. Definitely not pretty. So So we'll see how that plays out. But as of right now, I do expect more downside this week for the market. I do believe we'll see a pretty quick move downwards pretty soon this week, next week. I think it's going to happen really soon. Now, if we go over and look at the dollar, last week the dollar did absolutely soar. We made new highs. We saw a 1.5% gain, over 1.5% gain for the dollar last week. And again, this slight red move right now doesn't mean anything. So overall, this is not good for the dollar, or not good for the market. Amazing for the dollar, but not good for the market. The dollar is going to be seeing new highs, which will be draining liquidity out of the market. But however, again, let me just remind you that this is just now starting to go up. It does have a 1 to 3 month delay, mainly a 3 month delay to the market. So this has no effects on the market as of right now. But once we do start pumping and we see like maybe 104, that's when it will start to really affecting the market. So that's when you can actually start timing that 3 month delay once we reach there. But as of right now, this is definitely bearish, but it's not a area where we're going to be shorting it because of the dollar, right? It's just a confluence for the longer term. Now, oil is down about 1%. Now, it's very tricky to say that is the top end for oil. No, although we have seen my main target. So anything above that is extra. So, we very well, this could be the top and that'd be completely valid and that'd be completely fine. Okay. But I don't think so. I don't think so. The Iran war has not ended. It's still going on. They're still blocking tankers. I heard a little rumor that, not sure if it's true, but I have heard that now this war has happened and now they're closing and that strait and lowering mines in the ocean now, that um, insurance companies are not wanting to insure the tankers, meaning that the companies cannot push that tanker through that canal or through that strait because of the high risk of it getting sunk, and then they have no insurance on it. So that is something I've been hearing, and I heard that even if they end the war now, they're still not going to insure those tankers just because it's still risky that it may escalate again. And if that's the case, then I don't see oil ever recovering that fast. I still think it's going to take time, even if it does end now, because especially since they have been bombing a few of offshore oil rigs and some oil plants, so it's going to have to take time for it to actually be fully functional again. So overall, I don't think that's bullish for oil at all. Now, um, we are extended, right? Again, we have seen my main target, right? So anything higher is extra. We very well could go higher, right? I think we do. I really do think we go higher, but it's not something I'm going to be buying oil off of right now, right? Oil stocks, maybe, but am I going to sit here and like trade futures on oil? Probably not, right? Unless we actually see a good setup. But as of right now, kind of like what I said earlier for the market, is that we're pretty extended from that moving average, right? So the higher we are from the moving average, the bigger that gap, the more extended we are, and the higher price you're paying, okay, which is more risk, right? So this is risk off for oil right now, okay? We do need a pullback. Probably will pull back to that moving average at 87. I mean, I would not be surprised if we do. And we very well may not. It's not like a guarantee. It's not something that I expect. But it's definitely something I'm not going to be putting risk on just because we are far from the moving average. So I would like to see a pullback to 87, but as of right now, I'm just going to let oil do its thing. But if we do pull back to 87, we just do start bouncing, then that could be a good dip to add on to your oil stocks or even oil futures. But until then, as of right now, I'm just going to let it do its thing. So. But I don't think this is going to be a very, very sharp move down for oil. I don't think this is going to be just one spike higher and then that's it. I do believe it's going to last longer. But I could be wrong. I mean, there's so much to this Iran war. Things are changing every day with it. So whenever new news comes out, that's when we can really make better decisions. But as of right now, this does not look good for the market at all. And this will affect the inflation report. I think April. So April, if oil is I think it's already too late to be honest. The month is already halfway over. So I think that inflation report may be bad. April, I would expect it to be bad at least. Maybe not terrible, but at least somewhat bad. But definitely higher than expectations is what I'm thinking. Now the only way that would be actually important is if oil is still high. Now, I think if the war ended, oil went all the way back down. And my price, my thoughts on oil was wrong, and we don't actually stay higher, and we do actually remove all these gains that we had oil, and then the war ends, then even though if inflation is bad, then we know that that's not, even though it's bad, we know it's not going to be staying around because oil, sorry, the solution, the problem has been solved with oil, right? So I think if the inflation report is bad, we would, if inflation reports is bad, then we're going to need oil and this war to continue on for it to actually really affect the market. But that is basically my macro view. Now we will cover. I mean, nothing really changed from the last call that we did for the macro. It's just more of what has already played out, right? So right now, I guess we'll go over to crypto and see. Actually, you know what? We won't go into crypto because, well, we are, but crypto is my next trade idea that I've been pointing out here today. So we'll go ahead and actually just do both those in one.